Alright, hold the pitchforks, folks. I know that there's a bunch of leverage-loving, house-hacking,
crocodile wrestling, shark diving,
real estate bros out there who are probably gonna get triggered by this title and this video, but I assure you that I will be releasing a video that argues in favor of real estate and the advantages real estate has over stocks, so stay tuned for that. Now, if you're into real estate, give this video a watch, and for those of you who love stocks and prefer stocks over real estate, join me for some good old confirmation bias. Now, before I proceed, I want to say that whenever I refer to stocks, I'm not actually talking about individual stocks, but I'm talking about a collection of well-diversified funds within an ETF. So I'm really referring to well-diversified ETFs. So whenever I mention stocks, that's really what I'm talking about. With that out of the way, let's get into it. Advantage number one, easy to set up. It's really easy to get started with trading ETFs and stocks. All you really need to do is open up a trading account, which you can do very easily online, and worst case, you might just have to give your local branch a visit and set it up there, and you could probably have it up and running in a couple of days. Now compare this to buying a house where you have to work with a realtor, drive around to different properties, perform a pre-purchase inspection to make sure the property is in good order, and pay a lawyer for adjustments and escrow and other associated fees. Advantage number two, very low barrier to entry. Where I live, the down payment on an average house is upwards of $100,000. So even if you have a substantial amount of capital, let's say $25,000 to $50,000, you may still not be able to enter the property market. With stocks, however, you can start with as little as a few $100s. The ability to buy in with small tranches into the market really aligns very well with how people earn their money. We don't have a bunch of capital right at the outset, but rather we make money as we go. So it's very easy to take a portion of your monthly or your bi-weekly paycheck and allocate it into your stocks or ETFs. Compare this to housing where you have to save up $50,000, $70,000, $100,000 or more all at once and then dump it all at once into one property. Number three, when you buy into an ETF, there is a fixed charge, so the larger of a tranche you buy, the lower the percentage is the commission, but truth be told, a lot of brokerages out there these days have zero commission trading, so trading is almost frictionless. Compare this to buying real estate where you have to pay land transfer taxes when you buy and pay realtor commissions when you sell, which can be in the thousands of dollars. Advantage number four, stocks are very liquid and there's precision in their pricing. Most ETFs are extensively traded and you should probably stay away from the ones that are not. And when you make an order to buy or sell, the order can be executed in a few minutes, provided it's within trading hours. High liquidity also confers another advantage. You can see almost exactly what the price of the stock is, and if you use a limit order, you can usually buy it at a very precise price. Now compare this to real estate where there have been periods in history, such as the one we're living through right now, where prices have gone down, but people cannot really buy into homes just because the servicing costs are so high due to the high interest rates. Furthermore, the primary way of valuing a property is through comparable sales. And this is only going to give you an estimate of what your property is worth, and the real way to know exactly what your property is worth is when you actually sell it. Advantage number five, low or no taxes. There are a number of tax benefits to investing in ETFs. There are registered accounts available to a lot of individuals, and when you invest in these registered accounts, you may pay little to no tax when you sell. Please note that this only applies to eligible investments, and you should educate yourself on what constitutes eligible investments in your jurisdiction. The above should not be interpreted as tax advice. Impact of taxes will depend on your jurisdiction and personal circumstances. Note that capital gains in the TFSA may be subject to tax if trading patterns within the TFSA are deemed to meet the criteria of day trading. Consult a tax professional if you want a clear idea of tax implications. Even if you were to invest in an unregistered account, stocks are subject to capital gains taxes, which are taxed very favorably. Now, rental properties are also taxed very favorably. However, you still have to pay commissions when you sell, and that is a percentage of the total value of the residence. You will also have to pay commissions on your primary residence, which is tax exempt, but that's still a big chunk of money you'd be paying, often in the order of tens of thousands of dollars for an average home. Advantage number 6, greater diversification. How does one diversify in real estate? Well, you'd probably have to buy a number of different types of properties like condos and townhomes and single-family residences, and you'd have to do that in multiple geographic areas. That is not practical for 99.9% of people. However, with stocks, if you buy a well-diversified ETF, that's going to cover a broad range of companies of different sizes in many different geographies, all with a few clicks. The winner here is clear. Advantage number 7, no carrying costs. Even if you were to buy an investment property, you have to pay the principal and interest on the property, including maintenance, and you'd have to pay land taxes as well. In my experience and where I live, it is almost impossible to find a cash flowing property even with a 20 or even 25 or 30% down payment. So you would still need to pay carrying costs out of your pocket. Now this obviously is not the case in different places in different parts of the country, but it is a relevant point to consider. Compare this to stocks where there are no carrying costs. Assuming you don't use leverage, you just buy the stocks and you just sit and wait, and you preferably should forget about them and then check on them every couple of years or so, and you'll be okay. Advantage number 8, investing in ETFs is almost passive. Now to maintain your portfolio, you probably have to do like a few hours of work per year. Not too shabby. Even though many recommend checking on it less frequently. You can automate the processes so that you don't even need to look at it for years. You can set part of your paycheck to go into your investment accounts and automatically buy a certain dollar value of shares. Contrast this with home ownership where maintenance issues will come up, and it will always come up when you least expect or want it to happen. There is never a good time for these things to come up, and these issues can be a major headache. Gutters need cleaning, lawns need mowing, and snow needs plowing. Basements can get flooded and roofs can leak. All these will require your immediate attention. Believe me, you're out there, you're chilling with your friends, having a good time, and you get that text, you get that dreaded text from your tenant saying that their roof is leaking. And before you know it, you're scrambling, stressing out, sitting in front of your computer and trying to get a PhD in roof repair so you don't get screwed by the contractor on the quote. Number 9. Homes can reduce your mobility. Homes can reduce your mobility and make you location dependent. Investment properties can require you to live in the general area of where your investments are located until you make it big enough to hire property managers, which, by the way, will reduce your returns. Even if it's a home you live in, one insidious impact that is not often discussed is that a home can tie you down to a place. While this is a good thing when one is older and looking to be part of a community and raise a family, for younger individuals it may not be. A single 30-something may decline a job opportunity in another part of a country. Heck, he or she may even not apply or look for opportunities outside their area. And finally, I want to leave you with a thought that I had when watching the movie Nomadland. I was shocked at how you could have an entire town just disappear because one key industry sort of declines or is no longer operational. Now, we had seen this in a larger scale in a city like Detroit, which had experienced an immense reduction in population simply due to the exodus of the car industry. Now remember, for most of us, real estate investments are always inherently lower in diversification. There are just a couple of homes that most people will realistically buy, most small landlords, and that presents a very real risk in the long run. So there you have it, folks. That's the end of the video. What are your thoughts? Let me know if I missed anything, and if you feel like you got value from this video, please like and subscribe. Cheers, have a great day.